This is a session about the changing payments value chain, and there's no stronger signal to me that the value chain is changing than mergers and acquisitions, right? Clearly there's dynamics in the space that are causing or driving companies to need to evolve and to look at mergers and acquisitions as a potential way to do that. Since we have Ron on the stage, it's hard to avoid that topic. So I'd love to poke about that a little bit and just ask some questions. Ron, from your perspective, are these mergers about scale? Are they about defensive posturing? Are they proactive, reactive? How do you view, not just your merger, but in general, the space and what's happening?
Yeah, look, I think it's inevitable that a business or an industry such as ours starts to consolidate. The cost of deploying technology, which is one of the core things that we all need to do, is massive. I mean, just take WorldPay as an example. WorldPay, in its independent form, basically spent about 600 million pounds on a new technology platform. Not many companies can do that just because of the scale. We were part and parcel of a PE firm, two PE firms, private equity guys, Bain Capital and Advent International. So inevitably, they wanted to have an exit. It made complete sense for us to start to grow by going for scale. The things that I tend to think are really important in the industry tend to be about scale. Volume drives productivity, it drives a lower unit cost, and that's a really important efficiency model. The second one is access to distribution. You've got to be able to find new ways to get new customers, and that's an important second criteria. The third one is technology, obviously, and the fourth one is principally around regulation. So I think consolidation is inevitable. I've always had a view that there will be probably three types of entities that will be residing over the next 2, 3, 4 years, 5 years maybe. One will be a bunch of global consolidators. The second will be a bunch of people who are regional providers. And the third ones will be, let's call them niche, really fast, agile technology providers. So I think that's the way that I see the world moving.
So while one objective is no doubt scale, right? There are sort of benefits from a cost perspective. There's other things that can be done there. I'd argue that at least for some of the providers, an additional thing you mentioned was technology. What I hear a lot, and Melinda, I'll sort of ask you this about you. I'll ask you this a little bit. There is a legacy technology that exists within these organizations, and any large organization, that has to be sort of overcome over time, right? The bigger the organization, often the more legacy technology exists. What we hear a lot is that the threat is Square, it is Stripe, it is these new companies built with modern technology platforms. Melinda, how do you counter this sort of aggregation of legacy providers?
Well, I think it really creates an opportunity for customer-focused companies. I think it's really hard when you're trying to merge two organizations of hundreds of millions of dollars of tech debt and systems and hundreds of thousands of employees. How can you stay really, really focused on the customer and their problems of money movement and reconciling their books and being able to take card payments, omnichannel, and so. I think it's very much a tale of two worlds. I think companies like Square or Stripe, they really benefit from the consolidation happening in the back end. Say, for example, with Square, we use FDE as a processor, and so if there's more consolidation and more savings there because of these mergers and getting more economies of scale, that actually benefits us. So I think we can see it all playing together really well.
Great. Well, we could probably spend the whole panel talking specifically about mergers, but we'll move along. So I think the other big trend, and you mentioned it as well, is regulation, right? Especially here in Europe, it feels like that's a big driver as we look at the economics of transactions and just the way the opportunities are emerging. How do you view, we'll start here, how do you view the impact of regulation, whether it's PSD2 and GDPR or other regulation coming into the space? How does it impact the way you guys approach things?
Well, first of all, it certainly adds to the dynamism in the space. But the biggest driver is still changing consumer behavior. So I think GDPR is simply really about the compliance. PSD2 is quite different because that creates new opportunities, potentially for some providers threats as well. From our perspective, what we see, at least for the next 5 years, is continuing fragmentation in payment methods actually globally, which means in any given market, there'll be more and more choices for a consumer of how to pay. And that creates a challenge for service providers to the merchant. How do you provide a cohesive proposition to the merchant, advise them on the right options to add, enabling them to create a smooth experience for the consumer, not bombarding the consumer? all the while bearing in mind, as we saw in the last presentation from Accenture, the consumer is king. They will easily take their business elsewhere if their preferred payment method isn't provided by the provider. So PSD2 will drive more direct bank payments, but I think it's just one part of a bigger picture of how to
So
manage.
for you guys specifically, though, is it an opportunity or is it a threat?
So for PPRO, it's a big opportunity because our raison d'etre, the big value we add, we partner with both WorldPay and the Appstone, is we address the complexity that payments fragmentation is causing to allow them to focus, as Melinda talked about, on taking care of the many other requirements that the merchant has around omni-channel, around smartphone optimization, dealing with risk, providing BI-type analytics. These are all things the merchant's crying out for, and dealing with many, many different payment methods is something they could do without, and that's where PPRO comes in as a valued partner.
And Sanjay, what about you?
Yeah, I think, just picking up on a couple of the topics that we've talked about, when we look at some of these consolidations happening, Ron, you're absolutely right. When something that becomes very basic and core, such as the basic payment processing, and then it's really about scale. And where it creates opportunities for startup companies like Appstone, as we come in with a very different view of seeing what are the changes happening in consumer behavior, and marketplaces are clearly really changing the dynamics of how anonymous sellers and anonymous buyers are getting connected. And so startups like us are focused on that customer problem in a very, very detailed fashion. So for example, just one simple tiny fact that goes beyond payment processing is on our platform, we have a very special technology where we are onboarding millions of sub-merchants in a highly automated fashion for Expedia. These are completely unknown buyers who we can very quickly check whether the home or the property that they are trying to list on with Expedia is really a property or is it really theirs? And so it really is going beyond payment processing to truly enable that end-to-end value chain of enabling that consumer transaction. And it's a very specific, very niche solution that eventually will gain scale, and probably we'll see some mergers happening in that domain.
And what about from you? If we look at something like PSD2 more specifically, does it create more opportunity? Does it potentially disintermediate some of your existing business by offering new pathways that maybe don't flow through the normal four-party system? How do you view it?
I think PSD2 is a positive, not just from a business point of view in terms of WorldPay, but also for the industry. It's increasing competition, exactly as Simon says. Look, the reality is that access to the payments networks was restricted. It was basically held by banks. So what PSD2 is doing is increasing competition, it's driving innovation, and it's opening up access. So that's really what it's trying to drive to. I think the consequence of the emergence of AISP, account information providers, or PISPs, payment initiation providers, is a really positive thing. It's going to keep us and many others on our toes. So, when Melinda talks about kind of the new players, if I can call you a new player, basically driving the agenda, I think what it does do is that it keeps everybody on their toes, but particularly organizations which are large, because you've got to be creative in terms of driving activities. But regulation, I think, is actually a positive thing for where we are today.
And Melinda, I mean, you guys are a new player, at least in the market, right? So how do you view it as something that you can take advantage of, or does it fundamentally change the business?
No, definitely. We're very excited about PSD2 and open banking in particular. There's so many parts of the service that we deliver to sellers that we could optimize through open banking. If we think about underwriting new sellers onto our platform, if we think of dealing with a lot of customer success queries we have around risk, so being able to access real-time bank information will be incredibly powerful to making Square even more seamless for our customers. And it's really interesting looking at some developments in the market. Plaid just launching here. Apparently you can link with Plaid a bank account in 11.5 seconds. And so that's really going to set a new norm for consumers in terms of the kind of pace and the level of integration they're going to expect from financial services companies in the future.
So you all make at least some of your money off of the interchange or the cost of a transaction. How do you view regulation in that space? How do you build a business model off of expectations around capturing a certain part of revenue of a transaction if a local government can change the rules and suddenly you can't depend on that revenue anymore? How does that view the way you model, or is it just one of those things that you monitor but not actively sort of worry about fitting into the business plan per se?
Yeah, I think more the latter. I think on balance, as Ron says, I think regulation, certainly in Europe, has been overall really positive for the payments industry. And at the end of the day, we're dealing with consumers' money, and we're all consumers, right? So we don't want to be ripped off. We want our money looked after. Merchants need to be treated fairly too, and I think that's where interchange has been regulated, because frankly, they were paying too much. So I think it's just part of the environment we have to navigate. Outside of the major card schemes, the concept of interchange doesn't exist. It's not monitored by regulators in the same way. But I think any payment method that grows in scale, if there's unfair profits, then it's going to get hit at some point in time. And I think as an intermediary, you need to be aware of that if that's part of your value chain.
Sanjay?
Well, I think if you look at the interchange and what's happening, to some degree, it's the right thing happening for the consumer. Prices are getting right size for the consumer, but that puts pressure on vendors like us, right? From a business model perspective. So at least for us, again, coming up with that more startup and innovative mentality, we're looking at how do we create more value-added services, both for that sub-merchant and for that consumer. One, to deliver value, and two, to create a revenue-generating opportunity for us and for the everybody involved in the value chain. So just one quick, simple example is, like in a marketplace scenario, while yes, processing that payment is super important, but we're again going beyond for the sub-merchant. If you're listing your home, we are figuring out a way using data science to advance pay to that consumer before the stay has actually happened. And so that creates an enormous opportunity for that sub-merchant to be able to get access to funds before somebody's actually stayed at their home. And so those are the types of value-added things and innovation that we're trying to bring to the market.
Yeah, and we saw on the data prior to this session, right, that is where the growth is in terms of revenue perspective, is in the value-added services. So, Sanjay, you mentioned marketplaces. That's one of the other sort of big evolutions in the space, right? It's no longer just about the typical merchant or retailer. We now have marketplaces, we now have the super apps, we now have platforms that are driving a lot of the commerce. How are they different as a customer to you guys than the typical or the traditional merchant?
I think it's again, the consumer has really changed in this case. It's really connecting us humans back again. Very similar to what we did with barter trade, generations ago, where now anybody could be exchanging commerce with each other. The new complexities that come to bear are really, fraud of a very different type. And how do you really ensure that the sub-merchants who are coming onto the platform, the driver that is coming onto the platform, or the homeowner that is coming to the platform is really who he is? And so regulatory implications are even higher. At the end of the day, a marketplace is nothing more than money movement, and it is a money transfer that is happening between unknown entities. And how do you do that very effectively and ensure that there is trust? And so security, risk, and trust becomes a very, very critical factor in making the customer feel comfortable to be able to start interacting with the marketplace.
Ron?
Yeah, look, I think these super apps are going to grow and grow because what they're doing, and I'm talking about things like WeChat and people like that, and Amazon, what's happening is that they're basically bundling a whole bunch of services that typically you would use multiple apps for, as opposed to, so it's basically just a consolidation play. What I do think is going to happen, though, is that there will be a growth of those, and there's no such thing as a typical merchant. So whether it's in WeChat or wherever, at the end of the day, it is about managing risk. It is about providing alternative payments so that they've got the greatest number of capabilities in terms of what needs to get done. It is about risk management. It's about fraud management. And it's also essentially about providing, let's call it an acquiring service and gateway service alongside that. So when you start to see the suite of products that many of us are providing, then I think you start to see, competition is going to increase, particularly for those that want to play in that space. But payments is increasingly becoming invisible as we go forward. It's no longer something at the forefront of the minds of consumers. They load up the wallet, they keep it in there. Many of you guys will be using Uber or some of these apps. You don't really think about the payment. You're thinking much more about the service.
And that presents a paradox, right, for us as payment service providers, which is, as a consumer, the process needs to get so simple it's invisible. Whether it's the Uber experience or you're ordering by voice off your Amazon Echo, you're not thinking about how you pay. But behind the scenes, whether it's for risk or trust or choice of payment methods, it's getting more and more complex just to execute a payment. So as a payments industry, we've got to manage that ecosystem, that complexity, which is getting bigger and bigger while delivering a frictionless experience.
And is that complexity somewhat regional? One of the arguments for why the super apps have been so successful in China is that from a cultural perspective, there's less desire for choice in cultures like Asia, partially just because of the evolution of the culture and the government and other factors there. In a sort of Western culture, everyone wants to pick everything, right? So do we see the emergence of those platforms and the complexity in them being somewhat driven by that, or does it feel like, well, I'll stop because everyone's shaking their heads yes? So
I mean, I think clearly any of the, at least in the marketplaces, what we are seeing is, you have the well-known brands like Uber, Lyft that start, but then very, very quickly you see a much more regional focused variation of that solution come up. Like in India, it's Ola Cabs, and I think that making that solution very regional and very local, because at the end of the day, since we are seeing unknown humans getting connected, but having that cultural solution of that same seller and the buyer from that same region definitely does create that sense of, yes, I trust this platform more. And then also the user experience that tends to be more generic in the larger marketplaces versus the regional one creates that differentiation. So I do see an emergence of the regional players in almost every field, and they're becoming mega companies on their own within those regions.
I would say you have to differentiate the use case somewhat. So I think in-person payments, it's much more localized, and so if you're buying some like spring roll from someone, a vendor in China, they have the QR code, and that's WePay, and that's pretty much the only tender type that they accept, WeChat, and that's the only tender type they accept. If you think about e-commerce, very much that you need to have the payment types that your buyers are demanding. And so if you're a UK retailer and you're selling globally, you need to have Afterpay if you have Australian customers or increasingly US customers. You have to have Sofort or Klarna if you've got German customers. And if you've got customers from the Netherlands, you need Ideal. And so it very much depends on the use case, in my opinion.
So how is if we focus on the consumer side, and you're right, the proliferation of the different payment methods, the desire for the localized method, how does that shift how you approach the business? Not just from well, obviously you need to offer them, but how does that change, whether it's the economics or the way you look at technology and what you platform versus what you regionalize? How do you view that?
Yeah, well, I saw this at PayPal and Braintree and increasingly at Square. We're having to put these payment methods into our gateway products. And there's continually, as we go into new markets, thinking about which payment methods work for each market and then building out those connections. And so you see a lot of PSPs actually differentiating in terms of the sale on how many payment methods that they can offer. And that's a big investment, not only in terms of the initial upfront cost of the deployment of the integration, but also in maintaining 200 integrations across like multiple countries. And so that has like both positive and negative impacts on margins.
And Simon and Sanjay, I know you guys had mentioned a partnership. Is that part of that? Is partnerships become a way to access more of the market or more of the global market?
Yeah, I mean, we work with about 140 PSPs worldwide, from the very biggest to small agile startups. And part of the value is speed of access, but then also, as Melinda says, as you have a growing portfolio of payment methods, there's a heavy maintenance cost, which we totally absorb as PPRO, so we're managing that. I think a big area where we work with our partners, though, is also helping them. It's not simply enough to offer to the merchant, say, oh, we've got all these payment methods. What conversion are you offering? And this requires real domain expertise around each and every payment method. So Ideal here in the Netherlands. What's the vertical sector of the merchant? What's the channel? Is it e-com or is it through the app? And optimizing conversion really varies by industry, by geography. Is it a domestic transaction? Is it cross-border? So it's quite an area to get into. I think the reason we've been so successful as a strategic outsourcing partner, though, is it's stuff that should not be a priority for a PSP. They need to be focused on that overall merchant proposition. and looking at huge challenges within different sectors, or like Sanjay says with marketplaces, how do you deal with the whole sub-merchant trust and KYC and compliance area?
And Ron, this global acceptance is your bread and butter, right? How do you guys evolve and continue to keep up as new entrants come into the market where they're offering that global acceptance?
Yeah, look, we've got about 320, whatever it is, alternative payments. I mean, to call them alternative is wrong because they're actually the default payment method within each of those markets. But so what we do is to make sure that we keep them current, and more importantly, look at verticals. If you look at the type of verticals that WorldPay is involved in, something like 85% of transactions are good transactions that go through. In other words, there's a 15% decline rate across the various industries. When you peel that back and look at gaming, it's a very different number to airlines, to digital. So what you've got to do is to make sure that you understand not just the domain expertise, but where are the cards coming from. And one of the core propositions is not just in terms of MasterCard or Visa, but how do you ensure that you drive acceptance to a level which is better, which means that the merchant is actually getting more sales as a consequence of you being involved in that transaction. That's where the value add comes, and that's when you start to use real data to say it's coming from this bin, it's coming from this card, it's coming from this geography, it's this type of transaction, and we know that we can increase that. There was the recent example where through one particular card type, we changed the acceptance rate from 66% up to 82%. For a merchant. That's a huge number of sales that they wouldn't have had otherwise. And that comes just through the value of using data to try and drive that. But there is a cost associated with that, inevitably. And you ask about the economics. Look, sometimes you don't make as much money on some of those transactions as you would on a Visa MasterCard. But the reality is if you don't offer it, someone else will, and they'll start to seep into that merchant relationship.
So from a pure data sharing perspective, one of the interesting things to me would be why can't a platform or a marketplace share data directly with a financial institution to do something like ensure greater approval rates, right? Like if we know of a situation in the US where a very large marketplace has gone to the banks and said, look, we'll take all the risk. Any transaction, if there's ever a chargeback, we'll pay for it, no problem. But approve every transaction we send through, no matter what. What's preventing models like that from evolving?
Protectionism. I think there's nothing more complicated than that. Banks or many financial institutions want to make sure that they safeguard their customers and their relationships. They don't want to be passing that out. That's part and parcel of what open banking is trying to do. That's what it's trying to address in terms of these AISPs will have access to that type of information. And then if you're in that space as well, you could become a PISP, a payment initiator. So that's essentially, I think, where we're going to start to see a change. It's not sustainable for these collaborative models not to exist going forward. So I think we're going to see a massive change over the next 2, 3, 5 years.
So we brought up sort of Uber in passing and that payment experience being, the sort of disappearing of the payment experience. What's interesting is that we've been using that same example for 4 or 5 years now, right? So what's the new example of a payment experience where payments disappeared, right, where you don't think about it? Because while it's a great example, right, and it's maybe the best one, maybe that's sort of the beauty of that experience, I would like to think we've evolved and we've sort of grown since then, right, and we've baked it more into what we do and how we come and how we transact. But what are the other examples? Anyone have one that want to throw out?
I think it still is one of the best examples, but I think what's really happening is that was a niche example for one service. That concept of super app is one that I think is still evolving. In China, they've done it extremely well, but I think I'll focus on the segment that we're kind of focused very heavily on, and that's the travel sector. What we are seeing different is that it's, and you saw that in the press recently, it's not just about Airbnb and Expedia now going into more of that vacation type of an experience or a vacation marketplace type of an experience, but it's Marriott now. Marriott wants to get into that space. Marriott just launched a product very similar to Airbnb, and because that payment experience that Airbnb created is a threat to the standard, to the traditional hotel ecosystem, and so now it demands a sort of an innovation from those merchants, And we're working with some of the largest hotel chains where they're coming up with a very different experience, not focused just on the room, but the total experience and how a consumer can buy that total experience of being in a room, but being able to get spa treatment, but being able to get an experience of a tour within that. And how do you bring all of those services together and provide more consolidated value-added services? That's something the hotels were not thinking before. But now they're being compelled to bring that new type of end product to market, which goes beyond just offering a room, and that's what we're trying to help.
And Melinda, if I combine my products in the Square ecosystem, right? If I combine Register and the merchant side with Square Cash and something on the consumer side, can I create an interesting, contextual or disappearing experience there?
Well, I guess it's like, what do you define as interesting? And so I remember being at Oxford and speaking to one of our sellers, Hamble and Bread, and he just finds it really great being able to use Square, that he saves about 3 hours a week of reconciling between various accounting software and platforms that he had to do before. So, really we speak a lot about these innovations and all these buzzwords like, blockchain, and I was asked in a panel this morning about virtual reality, and how that works. But I mean, if you look at the reality of sellers in the UK, so there's over 5 million small businesses in the UK, and 3 million of them don't even accept credit cards before you get to virtual reality. And so, really at Square, we're just really grounded in just helping small businesses, be able to operate and to have the technological tools to be able to compete with just basic card payments.
Yeah.
So.
Yeah, I think it's an interesting question about the Uber experience because, we can get bogged down here at Money 2020 with the industry issues, PSD2 and crypto and whatever. We can almost forget the old hype of things like Internet of Things, but actually that stuff's coming. So yes, the Uber example is overused, but the same experience I have with my S-Bahn app in Munich, to get on the local public transport. It's actually a super simple app. I'm not putting in my payment information each time. I just hit buy the ticket. I walk into the tube in London and just tap my phone. And all these seem good, but actually they're backward compared to China. Whereas the norm, you don't pay for your meal, right? You just scan your QR code at the beginning, order, and your checkout's done automatically. So our lives will transform. And this brings it back to your first question about consolidation in the industry, not just consolidation, but at huge premiums. Well done, WorldPay. Why are these premiums so huge that many people in finance can't get their head around? It's because all this stuff is going to happen. So it's a super exciting time. Those applications which make the consumer experience frictionless are less what we have to worry about. It's more taking care of all the other complexity.
So just a reminder to the audience, if you have questions, then please log into the Slido app or use Slido from the Money20 app. One of the questions was about blockchain, and I typically try to avoid it just for the sake of avoiding it. And the question just said, what about blockchain? Which I wanted to reply back, well, yeah, what about blockchain? But just to make sure I don't miss something, is there some relevance of blockchain and all this nonsense? Not in the theoretical sense, but that really matters to any of you up here.
We wouldn't. I wouldn't qualify ourselves as a startup if I was not doing something with blockchain. So that is one of the qualifications.
Got to raise money somehow, right?
So somehow you got to throw blockchain in there, and so so we at this point are definitely leveraging some of that technology, but primarily for really figuring out how can we do two things. One, really the KYC. Is there an ability to really streamline KYC, reduce our cost on doing that verification vetting through blockchain technology? We've started to scale that. We did some initial proof of concepts. We are now trying to scale that. And we are seeing a real benefit of that in that particular use case. And the second is cross-border settlement, and how do we use some of that blockchain ecosystem for cross-border settlement. So those are two use cases, at least, that we are trying to start to scale, but definitely nothing to offer crypto for pay. We're not there yet.
I think, look, I tend to have a fairly negative view on this at this stage in terms of the evolution of the ecosystem. It still feels like a bit of a fashion accessory, frankly, in terms of the way people think about this. I do think, however, as the technology evolves, as use cases emerge, I think distributed ledger technology will start to become much more established in our ecosystem. And what I mean by that is that when you start thinking about smart contracts, it makes a lot of sense for industries to start to use smart contracts so that payment happens in a seamless way, the Uber way, let's call it that, across a series of different interactions. So I think that's when it'll start to really emerge. But at the moment, there's an awful lot that's said about it, and no one's really using it. I can't think of many merchants who are actually asking us for, can you please make sure that you're taking Bitcoin as part of a transaction? It's just not happening. So I think it will happen, but it's got some evolutions to have before it gets there.
All right, any final closing thoughts from anyone as far as, of all the stuff we've talked about, anything that stands out to you is this is really where we're going to see the most potential or the most movement or the most sort of interesting use cases emerge?
For me, clearly, it's fragmentation of payment methods. So more and more payment methods that a merchant needs help to navigate.
All right.
I think you touched on it earlier, which is basically the impact of regulation. Banks were the ones that were being impacted and regulated. I think payments is next on the agenda. So I do think that the payments ecosystems are going to be impacted significantly on a global basis, particularly as cross-border trade happens.
Yeah, I think for us it's about how can we help our sellers get their money faster. I mean, that's one of the big reasons.
I know I'm almost out of time, but that's a pretty
And that's
harsh
one of the big
signal.
reasons why sellers use Square is because we deliver money as a default next day or immediately same day for a small fee. And so there's the instant SEPA credit and continuation of those infrastructure improvements. And so we really look forward to being able to help our sellers with those.
I heard what you said. You didn't say it. They may not have, but I heard it.
No, I think from my side, I think it's technology. I think I would agree with Ron. Technology solving some really complex problems. There's a lot of opportunity to still innovate in the payment space, especially the customer experience is changing very, very fast. And it creates a lot of opportunity for the large players and even for newcomers like us.
Great. Well, thank you all so much for the conversation today. If you join me and give me a round of applause to my panelists. All right. Thank you, everyone.